Good morning, trading world. It is 8:23 a.m. June 2nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. All right, new fund flows are being released, and all we can do is tread water and fight to stay in the current channel range. This speaks to how bad the market is right now. Yesterday, we started around 416, hit lows of 406, and wound up around 411. This reeks of low liquidity. Scattered and broken trade, dropping and rising quickly means there are lots of air pockets in order flow. If you were like me and you put on a bullish trade yesterday, hopefully you got half off profitably before the close of yesterday and should have a quick curtain call on the rest today. The 4-hour time frame is in control today. The MACD is telling us that trend has been sideways and is close to turning down. All right, I wanted to bring up a 4-hour chart while I was going through that part of the pre-market. So again, the MACD is telling us the trend has been sideways. As you can see, this choppy sideways action for, let's say, the last 2 days on the 4-hour chart. And that's brought us to some negative momentum on the MACD. But because we're above the zero line, the trend is still to the upside. But the closer we get to this zero line, the closer we get to this trend turning to the downside. On the volume weighted MACD, it's a lot closer to the zero line here, meaning we're a lot closer, or big order flow is a lot closer to hitting a downtrend. However, the trend energy is weak, but it seems to want to make another attempt at pushing to the top of the channel range. And that's it lifting itself up here on the RSI. So there's a chance we could get back up. And if we continue to make lower highs on the RSI, we're definitely headed down after the order flow of whatever is dispersed of the remaining new fund flows here between today and tomorrow. Then looking above that at the daily chart, it is entering a rest area or consolidation point. All of this points to a very large volatility box we could be in for, while the larger time frames consolidate. Be aware of a couple job reports that could knock us back to start off the day. All right, let me bring up the key levels for today. All right, and here we are with the levels of the day, starting on the resistance side. We have our jack resistance at 412 to the 413 area. Then we have our queen resistance at the 415 to the 417 area. Then king resistance at 418 to the 422 area. On the support side, we have our jack support at 410 to the 409 area. Then we have our queen support 408 to the 406 area, and then king support 405 to the 400 area. The main thesis for today is bullish, closing above the 409.59 with a projected target high of between 417 and 422. The alternate thesis is bearish, closing below the 409.59 with a projected target low of between 409 and 405. Order flow and internals are still somewhat trying to repair itself by filling a gap from Tuesday's opening. And by the looks of the major stocks, it will be overcorrected to the upside this morning. Order flow is scattered and broken, so it could be a gap up, then fall back while order flow catches up. The current channel we are in is 397 all the way up to 416. The next major channel is 416 up to 425. The next minor channel is 414 up to 425. Give me a moment while I bring up the scenarios for today. All right, our first scenario is our expanded range day structure. We could look to set a decision area low boundary around the jack or queen support area before starting to rally for a portion of the day. I always say that range days are the hardest to plot because there's so many different variations price action could take during the day. But one of the things that I want to kind of hint towards that an expanded range day could have a lot or similar traits as a trend day. And in today's case, it could mimic a trend day up. And when I say that, one of the main differences between an expanded range day and the trend day up is the previous close, represented by the blue line. And in an expanded range day, we're going to close below that at some point. We're going to break that. And we could have a day that kind of looks kind of similar to this, where we come down, break and close below that previous close, and then pretty much take off to the upside, just like a trend day that we would normally have. But that could be the only difference between that and our trend day structure today. So I just want you to keep your eyes open for that possibly happening today on the expanded range day structure. Let me bring up the next scenario. Alright, our next scenario is indeed that trend day up day structure that I spoke about. On the trend day up, we open with a gap up. We start with a fade back toward that previous close represented by the blue line. We find support on or before that previous close. Then we begin the uptrend for the morning, better known as the golden window. This is where, as soon as you find that support here and it's clear that we're support, this is where you want to get long, either through buying your calls or call debit spreads or selling your put verticals. Today, we should find our midday chop around either the possible queen or king resistance area. I need to correct that. All right, there we go. Around the possible queen or king resistance area. And then it'll be interesting to see whether we get the head fake the second half of the day and then a fade back down into the close. So that is our trend day up structure. And let me bring up the last scenario. Alright, our last scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop either around that queen or king resistance area before spending the same energy we used to go up to come back down the second half of the day. As always with this, especially right now during a high volatility time, there is a huge vice versa warning for this, because we could come into the morning based on what happened with one of the jobs reports, them not liking the numbers, because that's due out shortly. We could end up coming in and having a rounded reversal day the opposite way, where we continue lower, find support around the jack or queen support area and use the same energy that we use coming down the first half of the day to go back up the second half of the day. So I just want to let you know to be on the lookout for that as well. We're at a key and crucial point where the daily chart is on the verge of getting back into that overbought area. And I kind of spoke to this earlier, being that the 4-hour time frame is in control today. And those of you that follow me, you've heard me speak of the time frames being like runners in a relay race. The hourly has to run its race before it can hand the baton to the 4-hour. The 4-hour has to run its race before it can hand the baton off to the daily. And so this is going to be an interesting thing to see now, because the daily is hitting a point where it's going to go in consolidation. And consolidation on the daily is a lot different for those that trade intraday. It makes the levels that we see on an intraday basis very large. So you want to be on the lookout for that. And just because we move these large ranges, that doesn't mean that it's a foregone conclusion that we're going to break, because the levels on the daily are much different. I have to do that on another pre-market where I kind of break down the levels for the daily and the 4-hour and seeing the differences. But I hope this helps. Again, know your risk, and wishing you a positive trading day. Have a great one.